In today's video, I'm going to teach you how to dollar cost average or DCA for futures trading on Binance futures. This method can help manage risks and potentially improve your returns by spreading out your trades over time. Let's get started. First things first, you're going to want to open the Binance app on your device and navigate to the futures section. Make sure you're familiar with this interface as it's where you'll do all your trading. This section lets you trade contracts rather than actual cryptocurrencies, which can offer more strategic options but also greater risk, so use caution. Next, you'll need to choose a trading pair. For this example, we'll use the popular pair BTC to USDT, but feel free to choose any pair that suits your trading strategy or preferences. It's important to be familiar with the movements and liquidity of the pair you select. Once your trading pair is selected, you'll employ limit orders to start buying at intervals. This is where the method of dollar cost averaging comes into play. Essentially, by buying small amounts of the asset at regular intervals, such as each time the price drops a certain percentage, you average out your entry price, which can reduce the impact of volatility. To take this further, you can manually place orders at varying price levels. Alternatively, if you want to automate this process, you can use a grid trading bot, which you'll find under the strategy trading section. The bot can help you set up and manage your trades with precision. As you continue to trade, you'll need to keep a close eye on your average entry price. This metric will guide your decisions on whether to hold your position, buy additional contracts, or adjust your strategy. Monitoring and adjusting as needed is key to the success of your DCA strategy. Don't forget about risk management. Setting a stop loss and take profit level for each trade can help you control potential losses and lock in gains. A stop loss will automatically close your position if the market moves against you beyond a certain level, while a take profit will do the same to secure your profits once a target is reached. And there you have it, a straightforward guide to applying dollar cost averaging in your futures trading strategy on Binance futures. By spreading your trades over time and utilizing effective risk management tools, you can potentially enhance your trading results, even in volatile markets. Remember, futures trading inherently carries more risk, so always trade responsibly and never invest more than you can afford to lose. Thanks for watching, and for more insightful trading tips, be sure to subscribe to our channel.